Most of us spent our entire lives working with money, but here's the crazy part. We've never actually been taught how it really works. I'm not talking about the textbook version, but the real system, the invisible architecture that pretty much decides whether you struggle or you succeed. So let's dive in and pull back the curtain on the game you've been playing without ever knowing the real rules.
Does this sound familiar? You're working 40, maybe 50 hours a week. You do everything you're supposed to, but at the end of the month, you're just keeping up. It's this quiet frustration, right? This gap between how much effort you're putting in and what you're actually getting out. And listen, that feeling isn't a reflection of your work ethic. It's a reflection of the system itself.
See, you've been locked into something that I like to call the salary trap. And it's a game that's designed to feel like you're succeeding, but really, it's just a very comfortable prison. The rules couldn't be simpler. Work, earn, and spend. And the system is absolutely brilliant at making that cycle feel completely normal.
It's really a psychological trick when you think about it. The system gives you just enough comfort, the decent car, the nice apartment, to stop you from asking the most important question of all. Why aren't you actually building wealth? It just fragments your money into 1,000 little payments, and it creates this illusion of prosperity. You end up with a lifestyle that consumes every single dollar, but what you don't have is wealth.
So to break out of this, you first have to understand what money actually is. And this is where things get a little wild. Most of what you think you know about where money comes from, well, it's a carefully crafted story. The reality is way more shocking.
Believe it or not, it all started with a simple con back in the 1650s. You had these London goldsmiths who would store gold for people and give them paper receipts for it. But pretty soon, they noticed something interesting. People just traded the paper receipts and almost never came back for the actual gold. So they started writing receipts for gold that didn't even exist, lending them out and collecting interest. They were literally creating money out of thin air. And that little trick wasn't just some historical footnote, it became the blueprint for our entire modern banking system.
Over centuries, this practice evolved into what we now call fractional reserve banking. The whole idea is that banks only need to keep a tiny fraction of your deposit on hand. But here's the part that should really make your brain hurt. Since 2020, in the United States, the amount banks are legally required to keep is zero. Yep, you heard that right, 0%. So this is the crucial point. It's not the government printing all the money. It's commercial banks. Every single time they issue a loan for a car, a house, a business, they are digitally creating new money that did not exist before. About 97% of all money is created this way, as debt. And this is the engine of the salary trap. The system needs you to borrow to keep the economy going, which creates the very consumer debt that keeps you running in place. Okay, so once you understand that money is literally created from debt, you realize something profound. There isn't one set of financial rules. There are two. There's the game that the vast majority of people are taught to play, and then there's the game the wealthy are actually playing. And they are completely fundamentally different. Just take a look at this comparison. On one side, you've got the rules for employees. On the other, the rules for owners. The biggest difference, the one that changes everything, is the focus on owning assets. Just remember this simple definition. An asset is something that puts money in your pocket. A liability is something that takes money out of your pocket. That one little distinction changes the entire game.
Now, in Game 1, your income is totally capped by the number of hours in a day. You're encouraged to take on debt for liabilities, things that constantly take money out of your pocket. Every single raise you get is silently eaten up by lifestyle inflation, and you, my friend, become a predictable, guaranteed revenue stream for banks and big corporations.
But in Game 2, the goal isn't just to earn more, it's to own more assets. They use debt as a tool, as leverage, to acquire things that generate income and grow in value. A loan is an income, so it isn't taxed. And with inflation, they get to pay back that loan with money that's worth less than when they first borrowed it. Their wealth literally multiplies while they're sleeping.
This right here is the fundamental mindset shift. The very same tool, debt, is used in two completely opposite ways. For most people, it's a chain that keeps them tied to a job. For the wealthy, it's a key that unlocks opportunity and accelerates their wealth.
All right, so how do you escape? How do you actually switch from playing Game 1 to playing Game 2? That has absolutely nothing to do with getting some massive raise or winning the lottery. The answer is so much simpler, and it all comes down to one critical metric.
Take a look at this. Person A earns $80,000 a year, but saves and invests a quarter of it. Person B earns more than double that, $180,000, but only invests 5%. Now, after a decade, Person A, the lower earner, has more than twice the wealth of Person B. It's wild, right?
The single most important factor in building wealth isn't your income, it's your savings rate. Period.
This is the secret. This is the whole shebang. The entire game is about creating a gap between what you earn and what you spend, and then systematically, automatically converting that gap into assets that work for you. That is how you finally break free from trading your time for money.
So let's talk about the new playbook. I'm going to show you 3 simple but incredibly powerful moves you can make this week to start playing the owner's game, using the system's own rules against it.
Okay, first, you have to understand where your cash lives. If you have, say, 10 grand sitting in a big bank savings account, you might earn $1 in interest this year. Meanwhile, because of that whole fractional reserve lending thing, the bank is using your money to create loans and is earning over $1,000 from it. You are letting someone else get rich off of your discipline.
So here are your first 3 moves. Take these one at a time. First, open a high-yield savings account and move your emergency fund there. It takes 10 minutes online, has the exact same government insurance, but it pays you massively more. Second, automate your investments. This is so crucial. Set it up so a piece of your paycheck goes directly into your assets before you can even think about spending it. This is how you truly pay yourself first. And third, call your bank and opt out of so-called overdraft protection. This one simple phone call stops them from charging you a $35 fee for a $4 coffee. It's your money. It's time to stop them from taking it.
Look, the system is designed, it's rigged, for people who don't understand it. But that's not you anymore. You've just seen how the game actually works. You know the rules now, so the only question left is, what are you going to do with that knowledge? Your next move is up to you.